So I said that when it comes to relevant costs, right? Mostly when it comes to incremental cost statement, we talked about incremental cost yesterday. And we even started looking at this question before the lights went off. Do you remember? And I'm telling you that when questions come like this, so far as it's not differential in nature, right? Look at all the benefits and look at all the costs involved and try to come up with the decisions. Now, we will do this and then I'll move to qualitative aspects of decision making. But then, if you know those things, it's going to help you to what? Answer management accounting questions with so much ease. Is that okay? Is that okay?
Yes, sir.
Okay. So one thing is that when it comes to incremental cost decisions, all you have to do is look at the relevant cost from the scenario, just like we discussed the last time. You get that again. Always go that way and you see that you'll be fine. Okay. I hope you got me. And by now, I hope everybody knows what relevant costs are. Everybody knows what relevant costs are, don't we? We all know what relevant costs are, don't we?
Yes, sir.
Yeah, we do. Okay. So looking at this example, the example we are looking at. Says the finance officer of a pizza joint located in Osu, known as Chicken Republic, produces the following incremental cost and revenue data to aid your decision. As the management accountant, revenue from sales of pizza is 25,000 for the year 2015. The management is expected to avoid wastage in flour and yeast combination by 20% of sales in the same year. The cost of the pizza restaurant at the time of construction is $10,000. An additional cost of $2,500 was incurred on buying of spices to give good taste to pizza. It was anticipated that not all the pizza produced for January would be sold. Because of the heavy demand in December, the loss in sales is estimated at $1,500, right? As a management accountant, write a report to the MD showing the net benefit or loss for the year and identify and explain 4 qualitative issues to be considered in your decision. Now, the thing with my students is that I always tell them that even if the examiner has not asked you for qualitative factors in decision making, you still have to produce it because non-financial issues are what even creates financial issues, right? And in every question that you get, I mean, the qualitative issues should always be on your fingertips. They should always be considered. Is that okay? So first of all, let's do the quantitative bit, right? Which is the aspects that are required, right? So we are going to do what? The incremental cost statement, right? So we are going to do the incremental cost statement for this decision, right? And the decision is what? A cost benefit analysis, right? A net benefit or loss. Net benefit or loss what statement, right? So this is what we have. Net benefit or loss statement. So we start with what? They say we are going to make sales, right? So we have revenue from what? From sales of pizza, right? Which will be gathered under our benefits. So looking at our benefits, we have revenue from sales, which was worth what? 25,000 also. And then it says that we are going to what? Avoid wastage in flour. So savings in wastage, right? Remember, if you do not incur the cost, that means you save the cost. So 20% of the sales, also, which is 25,000, will be saved. And 20% of this will be 5,000, is that also? So that means we have total benefits worth 30,000. But they said the pizza restaurant was built at 10,000. This is a sunk cost. Do you all agree? Is this not a sunk cost?
Yes.
Sir.
Yes, we cannot recoup it in any way, and it is unavoidable, right? So we are now going to now less the cost involved, right? So with the cost involved, it said that not all the pizza will be sold, but we need additional cost to buy spices, right? So incremental costs for what? Spices. No, so we are going to buy the spices for how much? 2,500. No, so and then he said it is anticipated that we are going to lose sales, right? So loss in sales of pizza. We're going to lose the sales. Loss in sales of pizza is 1,500. Meaning that if we put this together, we have about 4,000 worth of cost and 30,000 worth of benefit. So this results in a net incremental benefit of how much? Net incremental benefit of 26,000. So is it good if we continue to sell the pizza, or we should close down the pizza business? Is it good if we continue to sell the pizza, or we should
They
close
said
down,
it's good. We should continue.
right? Because it comes up with what? A good or a positive benefit, right? This is how I want you to answer questions. But then we are going to write what? You see these calculations, we can add it as an appendix. So you see how you write it. Statement of benefit or loss, introduction. So it depends on how I've analyzed the business and I've come up with the following conclusions. These are my findings, right? During the period, the pizza joint is expected to make incremental revenue of 30,000 and the incremental cost to be incurred is 4,000. As a result, the pizza joint is expected to record a net benefit of 26,000 in 2015. Conclusion: the construction cost of 10,000 is a sunk cost and therefore ignored in the relevant calculations. To make a sound decision, we need to consider qualitative factors. And some of the qualitative factors are: one, we do not know the demand conditions, right? The quality of the pizza can affect customers' demand. Competitive prices by other pizza joints. What's the reliability of the supplier who will be bringing our raw materials? These savings in wastage can actually change, right? Transportation costs incurred by the customer should also be considered as they are going to look for pizza joints closer. If the customer is aware of the ruling price, if there are substitutes available, right? Do you get it? Any other thing which are non-numbers but can affect your decision should always be considered in a decision-making scenario, right? And then you can use models that you think, like here, I can use the 5 forces model to look at the bargaining power of customers, even the bargaining power of suppliers, to look at the nature and competition in the pizza industry. Okay, things that can affect your profit or loss are all to be considered, right? Even the feasibility, whether you have resources to actually carry this out, the suitability, whether it goes in line with your mission, or the acceptability, whether your stakeholders are going to accept it. All these things are qualitative issues that may be considered when you are taking a particular decision. Did you get what I'm trying to put across?
Yes, sir.
Yes, and that's how you become very good with management accounting. Trust me, when you know this, when you get to level 3 and I'm teaching you strategic case study, you're not going to struggle, right? Because you already know how to deal with this. Now, since we have learned about incremental cost, we can learn how to deal with differential cost, right? And differential approach, right? The differential costing is the best approach I recommend to my students. What did I say? What did I say? I said it's the best one.
Approach you recommend to
You recommend to your students.
And this is for exam, right? And this only works when there are 2 alternatives. Okay, please, so I'm telling you, this will only work if there are 2 alternatives. Like, for example, go, don't go, right? Make, buy, shut down, don't shut down. Do you get it? Accept, reject. Do you get it? When you have, and these are the common types of decisions that you get. Something, either you are doing something or not doing it, and you are going to assess the two. Now, I always prefer differential costing because that one, even if you bring all, they will net out, right? The ones that are irrelevant will still net off, and you're still going to get the same figure. I prefer it for students during exam, right? But then there are alternatives like the one we did, just looking at the incremental bits, right? Which will require a little bit of technical competence, meaning that you must be so strong at management accounting to be able to, identify whether only this cost should be considered, only this cost should be considered. But when it comes to the differential approach, you are looking at differences amongst alternatives, right? So let's just look at a particular question, right? So a company which is ABC has spare capacity to pick up additional orders, and 2 orders are received from 2 old customers, and the details are as follows, right? So we have customer A and customer B, and this is the orders that they have, and then the selling price per unit and the variable cost per unit. Which order should be picked, assuming that they are mutually exclusive? So what is mutual exclusivity? When we say something is mutually exclusive, what does it mean?
It means that you cannot take all the 2 projects at the same time.
So anytime you hear something is mutually exclusive, it means that it cannot be done at the same time. You can't be alive and be dead at the same time, right? No, so you can't be asleep and be awake at the same time, right? They are mutually exclusive. So when it comes to mutual exclusivity, it means that I can only take one of these contracts and not both of them at the same time, right? That means I have spare capacity to pick up either of them. So when it comes, am I choosing A or choosing B, right? So you can use, if you are using the differential approach, right? In case I want to use the differential approach, what I'm going to say is that, okay, I would, if I decide to choose A, or I decide to choose what? B, they get it. And then maybe you can bring the differential or the incremental here. Okay, this is how I do it. Other people have different ways. I always like to keep things simple for myself. I hope it makes sense. So in that case, let's see, 2 old customers. Now, if we decide to go, I told you what is the most important concept when it comes to decision making. What's the most important concept?
Contribution.
Contribution. Don't ever forget. That is all you need all the time to be taking decisions, right? So anytime you see anything, just see if you can calculate contribution, right? So the first thing I'll do is to establish my contribution per unit, right? Whether these things are going to give me contribution. So contribution per unit. And we always want the one with the highest contribution, right? So for project A, we know that my contribution is going to give me what? 10 cedis minus what? 2 cedi, 50 pesos. True or false? And that gives me what?
7.5.
7 cedis, 50 pesos per unit. Not so. And this one,
Yes.
B, that'll give me what? 8 cedis minus
5.
6 cedis, right? Which gives me what?
5 cedis.
Per unit. Not so. So if I want my total contribution, which we know how to do, right? Total contribution is just our contribution per unit times the number of units, right? We know this. We've been playing with this for a while. So for project A, we know that our contribution is 7 cedi, 50 pesos. We now multiply by how many units are we producing under the contract? This is 4,000. No, this is 2,000. This is
2,000.
2,000 units. Yeah.
2,000.
this guy is what?
3,000 units.
1,000 units. And the other guy, that's 5 cedis by what? 3,000 units. Not something. So 7.5 by 2,000 will give us what?
Now 15,000.
This will give us 15,000 also. And then the other one,
It's 15,000.
also 15,000. But you see that here, we cannot really tell, right? We can't really tell which one is profitable, can we?
No.
No, because
Anna.
them have the same contribution, right? So
Yeah.
it means that we can move further to know which one we have to cover more of the fixed costs, right? So now we have to take out the fixed costs from this. And let's see. This one has fixed cost of 4,000, and this one has fixed cost of 3,500.
3,500.
So which is the most profitable?
B.
B with 11,500, right? And C with what? 11,000 also.
11,000.
So you see that there's a positive 500 if you choose this guy, right? If you choose B, but you lose that 500 if you choose A, right?
Yeah.
Yes. So there's the profit position. So this is how you do differentials, right? So if somebody was going with incremental cost, he can only look at the incrementals. And he knows that, okay, if I look at this, contribution will be the same under every circumstance. So the only thing is the difference in the fixed cost, right? Which is the incremental fixed cost, which is a saving of what? 500 less than that. And that's the only thing the person is going to record, that there's an incremental, there's a reduction in fixed cost by 500 within the two divisions, within the two decisions, and therefore it is better to choose the one with the lower fixed cost because it will result in the highest profit. Do you understand? But I don't want you to go that way because on the exam you may forget so many things. So you just go with do, don't do, right? Do these two and you should be fine. Using an opportunity cost approach, right? I told you an opportunity cost is so simple, right? It's anything that you earn, the opposite of it is lost, right? You lose it. So if you earn it, is it not a benefit to you? It is. But if you don't do it, it means you lose it. That means it becomes a cost to you. Do you understand?
Yeah.
So if it is a cost to you, okay, if it is a cost to you, the opposite of it is that it becomes a cost saving, right? So if it is a cost to you and then you do not incur it again, that means it is saved, meaning it becomes a benefit to you, right? And if it is a cost, that means it's still a cost if it is incurred. So get the idea. So if I'm going to spend 5,000 and I don't get to save, I don't get to spend it again, it means I have what? I have saved that 5,000, right? Meaning it becomes a benefit now to me because I end up not spending that money. Do you get the idea? So look at this.
Yes.
A company used to export, okay, export products to Somalia, right? And earns a contribution of 100,000 cedis, right? But now got a new contract. Okay, now got a new contract in UK, earning him 400,000 cedis, right? The contract in Somalia cancelled. So what has happened? What has happened? What has happened here? He used to earn 100,000. What has happened? Now it is cancelled. Is he going to earn it again?
No.
So
what does this become now in management accounting?
Opportunity cost.
Opportunity cost forgone.
Cost to you, right? I told you once you lose that thing, once it's money and you lose it, it becomes a cost. Once it's revenue and you earn it, it's now a benefit, right? So that means that your net benefit is what? The incremental revenue which you are going to receive from here, right? Which was 400,000 if you take the order in the UK, right? But you are also going to have the cost, which is the loss in what? The loss in contribution, because you are now going to incur that cost. You are not getting that 100,000 again, right? So the net effect is that what? You're actually getting 300,000 because already you used to get 100. And since that 100 is no more, the net is 300 you're actually getting. Do you understand?
Yes, sir.
So this is how we think in management. If you're a student and you have this with you, I don't think you are ever going to struggle. People do not take time to really understand relevant costing very well. They jump straight to solving questions, and I don't think that's a good idea, right? But I hope you are gradually getting the basics. So if we want to use this to do, let's say I want to use this same approach, opportunity cost approach to do the same question, right? So I am going to use opportunity cost. Maybe I'll say what? Maybe select contract, what? Maybe contract B, right? Let's select contract B and let's see. If you select B, that means you are losing A, right? So select B, lose what? Lose A. Do you understand?
Yes, sir.
Select B means lose A. Okay, so if I select B, what are the benefits I'm going to get if I select B? I am going to what? Get selling price. I'm going to earn revenue, right? Of how much? That's 10 CDs by 2,000. 8 CDs by what? Do you follow what I'm?
3,000.
Aha.
8 cities by 3,000.
I'm going to get 8 CDs at 3,000 also, which gives me what?
Yeah.
4,000.
24,000.
And then what other
24,000.
benefit I'm going to get? Because I've lost A, it means all the cost in A will now be saved. True or false?
True.
So I'm going to save savings in what? Contract A, right? Cost savings in contract A. I'm going to save the cost in contract A. So contract A, we know that the cost was what? 2 CD
10 cities.
at what?
Yeah, the cost is 2 cities, 50.
2,000.
2,000, right?
3,000.
Yeah.
5,000.
5,000. And I'm also going to save the fixed cost, right?
Fixed cost. Yes.
In fixed cost in A. Do you get the idea? So it means that once I choose
Yes,
this
sir.
option, all the costs in the other option will now be a saving to me. And all the revenue in the other option will be a loss now to me because I'm not getting it. Do you get the idea? Is that simple? So you see here, all the cost becomes a benefit now to me. And all the benefits that I would have gotten because I'm losing it, they now become a cost to me. Do you understand? So savings in the fixed cost in A, fixed cost would have been 4,000 in A, but since I didn't take A, it means that those fixed costs have been saved. Do you understand? So this becomes
Okay.
like the total what? Benefits if I decide to choose what? B, and that will be how much? 33,000 also. Okay. So let's look at the costs. Let's look at the cost. If I decide to go for B, what are the costs I'm going to incur? First of all, I'm going to incur variable costs also of how much?
Yeah.
For
3
that
cities.
contract, that is 3 cities by what? The 3,000 units.
3,000, which is 9,000.
9,000, right? And also, what am I going to lose? I'm going to lose
Revenue of A.
the sales in A, right? So loss of sales in A. So I'm going to lose that what? 10 CDs by the 2,000, right? Which is how much?
2,000. 28,000.
20,000 also. Is that
Yes, sir.
all that I'm going to lose? And then I'm going to incur fixed costs, right? I'm going to incur
Yes.
fixed costs in B, right? So you see, I'm putting all the costs together, and this one, the fixed cost was 3,500. So let's put all the costs together. What do we get? Is it 32,500?
32,500.
So does it result in a net benefit or a net cost?
Net benefit.
Net benefit of what?
500.
500.
500.
We have an incremental benefit of 500. And truly, too, when we weigh the options in our differential, you realize that we had what? A net benefit.
5,500. Yeah.
You get the idea? So it's still the same. So this approach is, people are not really comfortable with this because they don't understand it. But the whole thing is that anytime you don't incur a cost, you save it. Anytime you don't earn revenue, then you lose it. Does that make sense? Yeah, Kofi,
Done.
Kofi, your hand is up.
Sir, I'm okay.
Okay, that's fine. So is everybody okay with that?
Yes, sir.
Okay, sure. So let's try another one if we will get it now. So this is Brian, okay? This is Brian. And if Brian stays home, okay? So let's see. If Brian stays home, these are the costs he's going to incur. He's going to incur data of 30 CDs, breakfast, okay? Breakfast for, let's say, 10 CDs, okay? Lunch, 20 CDs, and supper of 30 CDs, right? Then he will send his girlfriend or wife money for 50 CDs. Then his uncle will give him a tip, right? If he stays home of 100 CDs, okay? Let's go to work. If Brian decides to go to work, he's going to have to buy data of only 20 CDs his breakfast at work is going to be 10 cedis in the morning, but lunch at work is going to be 40 cedis. Supper still be, let's say, 35 cedis. And then still sends his girlfriend 50 cedis, whether work or no work. But here his clients are going to give him money or tips of 125 cedis. Okay. And then maybe his boss, if he's around, you can give him some 50 cedis bonus, right? So this is what we have. Okay. So this one is revenue coming in. This is also revenue also. Then let me say neighbor. Let's say neighbor can give him some 40 cedis. So let's just see. This is what we have. Tip. And the question is, should Brian stay home or go to work? Okay. And I want us to use the opportunity cost approach. Do you understand? I don't want us to use with the differential to be easy because we are just comparing this and this. There's incremental of 10. This one is irrelevant for decision, right? Because it doesn't change. Lunch, incremental of 20. And also supper, incremental of 5. Girlfriend, irrelevant for the decision. Not so because it doesn't change. Uncle is only incremental in stay home. Then the tips for work, neighbor. You see, this one is easy, but let's use the opportunity cost approach and see if we get it. Do you understand? So put down the data and let's see if we can use that approach to work it out. So which of them is irrelevant for the decision? Which ones do not change, irrespective of the decision taken, whether to go to work or to stay home? Which of them doesn't change?
Breakfast.
Breakfast,
Girlfriend.
lunch,
Girlfriend.
Yes. So you see those ones,
Lunch, the prices are different.
their lunch changes. Lunch changes. So in that case, can we use the opportunity cost approach?
Okay.
Let's see how we'll do it. See, do you have the figures? So which one should we choose? Go to work or stay home? So let's
Work.
to
Let's
work.
start with work.
So that one you can go to work means don't stay home, right?
Mhm.
So we just pick one of them. We are just doing go to work. That means don't stay home. So if we decide to go to work, what are the benefits we get if we decide to go to work?
Okay. So clients
Okay, the
give you 125.
of how much? Of 100 and
125 cedis.
if the boss is around, he will also give us what? 50 cedis, not
50 cedis.
okay. But are there any cost savings? Are we going to save some cost in the other option? What cost will we save if we go to work?
Data.
Data. Okay.
Yeah, data is 20 cedis instead of 30.
Okay. So if we go, we are going to save data of how much?
10 cedis.
10 cedis. Because home we spend data of how much?
30 cedis.
30 cedis. But when we go to work, we spend 20, right? So that means
20 cedis.
not save home. We are saving data of 10 cedis. I like how you guys are thinking. I hope you are gradually getting it. Okay, what else are we going to save?
That's all.
That's all.
Girlfriend is 50. No, that's all.
So girlfriend was irrelevant, right? Well, but if you
Yeah.
you have to bring it down there, which will net off. That's why we didn't bring it. Are you getting it? But in case you don't even know, you repeat it, it will net off. Okay, so these are the only benefits we get, right? Which is a total
Yeah.
185, not so. Okay. So these are the total benefits. But what about the cost? What about the cost?
Okay. Breakfast 10 cedis, lunch 40,
Breakfast 10 cedis.
10 cedis,
Lunch.
40.
But lunch will not be 40 here. Do you know why? We need an incremental.
Okay, so 20.
Yes. Do you understand why lunch is 20? Because even if we stay home, we will still pay 20, right?
Yes, sir.
But when we go to work, we incur additional 20. Okay, then what else?
And then we have supper, 5
Supper,
5 cedis here.
an incremental 5 cedi, right? Supper will
Yes.
spend an extra 5 cedis. Then what else?
And so like, okay, that's all. I think
That's the
so.
only cost, right? Okay.
Yes.
But then are there any revenues that we are going to lose? Are we going to
Neighbor.
lose income? Yes, there will be a loss in income also, which is for staying at home. If we do not stay home, that means the money we'll get when we stay at home will be lost. Not so.
Lost, yeah.
That means the amount our neighbor is going to give us will be lost. And that was how much?
40 cedis.
We lost. And
Uncle,
the tipper,
uncle, 100 cedis.
100 cedis will also be lost. Not so. So if we put this together, how much is that?
So 175.
175. Okay. So that means that the total cost against the benefit, does it result in a net benefit
10 cedis.
of 10 cedis? So in effect, which is better, staying home or going to work?
So we have to calculate the other one also. Stay home is
Once you do one, you have covered the other one to see. All the data for both are.
okay.
So if the one that you are doing gives you a net benefit, it means that it is better than the other one. So there's no need
Oh,
for
okay.
the other one.
Right.
Do you get it? Because you've considered
Yes,
the
sir.
data in there. Assuming we took stay home, you realize that that one will give us a negative 10 cedis,
Oh, okay.
which will mean that do not pursue that one. So I'm just giving you all
Oh,
the
okay.
different approaches, but I hope it's making sense.
Yes, sir.
Okay. So gradually you are getting it, right? So this is the approach that I recommended in exam, which is what? Stay home. Not so the differential. Do you remember? Stay home and what? Go to work. Is that not what I
Okay.
recommended? So this is the one I recommended. So stay home, go to work. Then you bring your incremental. So if he stays home, what are the income he's going to get? So income.
So uncle 100 cedis.
Uncle is going to give him a tip of 100. So go to work, he'll not get it. Then his neighbor will give him how much?
40 cedis.
40 cedis, none. Then his clients will give him how much?
125 cedis.
125 cedis only exist here, right? Then his boss will give him
50.
cedis, right? So these are the only incomes he's going to get 140 against what? 175, not so. Then
Yeah.
have the cost, not so. Okay, cost. Breakfast,
Okay, so
right?
yeah, breakfast 10 cedis each.
Lunch,
20, 40.
20, 40, right? Then we had supper,
30, 35.
30, 35, also. Then we had what? Data, not so.
Girl, yeah, data 30, 20.
30, 20. Then we have girlfriend, also.
50 cedis.
Also, were these the only cost?
Yes.
So let's look at his total cost.
Okay, cool.
Well, this one give us what? This one give us what?
30, 60, 90. 140.
140. And this one?
100. 155.
155. Okay. So
Mm.
next? benefits or costs. This one is nil, right? And how about this one?
20.
20.
20.
20. So you see, this one is still giving us the net benefit, right? So it's better to go to work than to stay at home.
So this one is differential approach, right?
Yeah. And you see, this one is straightforward.
Yes, sir.
That's why when we start, I told you that this is what I always recommend. You just carry pa, 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 pa. But however, I prefer that just to stick to exam conditions, right? This one wasn't relevant because it doesn't change. So don't include it, right? It's the same for all. Which one to this one?
Okay.
Same for all. So if possible, don't include it. But in case you include it, it will still net off, right? It will still net off. So it doesn't really matter. Gradually, you are enjoying decision making. And when it started, it looked a bit strange. I know.
Oh, sir, I'm writing, please. Can you calm down a bit?
But you've
All
written
right,
the
thank
question already. You've written the question already.
Yes.
So now you understand how to do opportunity cost, right? You understand opportunity cost. That anytime somebody is earning something, if he leaves it, that means he loses it. True or false?
True.
Have that mindset and then you should be fine. That's what people do not get. But if you get that, you don't have a problem. Shall we proceed?
Yes, please.
So that was it. So now this question is for you. Let's see if we can play around it. What does it say? It says what? Junk Limited rent a small workshop for $50 per week, right? But at present, it does not use that shop. They could sublet the workshop for $80 per week, but they are considering using it themselves for a new project. In assessing whether the project is worthwhile, what is the appropriate cost for the use of the workshop? Theo, we could rent the shop for 50, but at present, we are not using it. Okay, but we could also sublet it for $80 per week. But we are considering using it for a project. So my question is, if we could sublet it and we are using it ourselves, that 80 is it not lost? Who can tell me why the $50 is not relevant? Why is it not relevant? We discussed something about notional cost. Who remembers?
Notional cost.
I told you if I have a place to rent, right, and I forgo that rent, it is what? It is opportunity cost, right? But is there someone to rent it now? If someone is there to rent it now, then it is actually opportunity cost. And also, anytime you are doing opportunity cost, and there are two alternatives, right? See, I can rent it out and get 50, right? Or outsource it to somebody and get 80. As a rational human being, which one would you take? Would you rent or outsource?
Outsource. Hey,
Outsource,
rent.
right? No, outsource because it's giving you more money.
Yeah.
You get it? And it's giving you more money is what you would have done. But they said you are going to use it for a new project, meaning you are foregoing both of them. But what is the next best alternative? Which one is the better one that you would have chosen, assuming you are not using it for a project? Between these two, which one would you have chosen, assuming you weren't using it for a project?
Outsource.
Outsource, right? Which is the 80. That means this now becomes the opportunity cost. Why? Why is the 50 not opportunity cost? Because you wouldn't have chosen it in the first place, right? You would always take this one over the 50. So anytime there's opportunity cost and there are options to choose between two things, choose the one with the highest benefit, right? Because you have forgone it and it now becomes a cost to you. So the opportunity cost for the decision making is now 80, right? Because if the company uses the facility, it would forgo the 80, which would have been earned. And if it were to sublet the facility for external use, hence the foregone alternative is the use of the facility in-house and the rent income of 80 now sacrificed. Do you understand? Do you get it? Are you sure you get it? Maggie, are you okay?
I'm okay, sir.
Okay. So we are saying that anytime you have to check something like there are alternatives, check the one with the highest, right? The highest benefit. That is what we are looking. Are we okay? Okay. So now, with that being said, we are going to learn how to use avoidable costs to take decisions before we come to relevant costs, special pricing decisions, right? So when it comes to avoidable costs in decision making, right? This is how I do mine. I use avoidable costs. We said avoidable costs are made up of two main costs. What are those costs? Who remembers? Avoidable costs. We said they are made up of two main costs.
Variable cost.
Variable
And specific cost.
A specific fixed cost.
Okay, variable costs and specific fixed costs, right? These are relevant costs. So me, when it comes to make or buy decisions, right? When it comes to make or buy decisions, I use avoidable costs. When it comes to shut down decisions, I use avoidable costs, right? So it could be shut down decisions or what we call discontinuance decisions, right? To discontinue something, discontinuance decision. It could be an accept or reject decision, right? Accept or reject decision, which we normally call what? A special order decision, right? You know, these ones usually have a lot of cost behavior, right? And cost behavior, you know, it's all about variable cost and fixed cost. That is why normally I like this because it has variable cost and fixed cost, right? I always do my things systematic when it comes to management accounting. And if you are my student, when a question is 20, most of the time you get 20 over 20 because you know the stuff, right? And that is what I want you to learn how to do, right? To be so flexible, right? We'll come to relevant cost of labor and all that. But for now, I just want us to learn how to account for these special orders and those kind of things, right? So with that being said, we are going to look at how to deal with what? We are going to start with make or buy decisions, right? Students don't like make or buy decisions because of how they usually do it, right? But I'm going to simplify make or buy decisions for you. But I told you every decision-making question, whether you like it or not, always make sure you talk about the qualitative considerations, right? So the purpose of make or buy exercises often involve the choice between buying in components from an outside supplier or producing it within the firm, right? And then a possible question is that here, if they like, they cannot bring out, if they like, they won't bring calculation. They'll bring theory for you. Do you understand? So if there's spare capacity, meaning you have extra room to take more orders, the choice is simple. It is worth buying a component if only the buy-in price is lower than the marginal cost incurred in production. Why? Because fixed costs wouldn't change even if we decide to buy or make. So here the decision is more around variable costs, and are you getting variable costs more than fixed costs? Because fixed costs, whether we produce in-house or not, the fixed costs will be incurred unless it is a specific fixed cost. Specific fixed cost only exists for a specific decision or a specific project or a specific contract or a specific division. Do you understand? But if you say fixed cost, that means it's fixed no matter whether you buy in or you outsource, you make inside is the same, right? So the decision is not conclusive. You must consider qualitative factors to also make a good make or buy decision, as I was telling you. So what's the decision rule? I always compare the avoidable cost of making to the avoidable cost of buying, right? So when assessing the differences in cost between making a product in-house or outsourcing, a key consideration is whether a spare capacity does or would exist. If there's spare production capacity available, the following issues arise. So your production resources may be idle if the component is purchased from outside. And that spare capacity, can you use it to take up a special order? So the fixed cost of those resources are irrelevant to the decision in the short term, as they will be incurred whether the component is made or purchased. I talked about this, right? And purchase would be recommended only if the buying price was less than the variable cost of our internal manufacture. So when we get to limiting factor decisions, right, which we are going to do, that's the last thing we are going to do today. So with limiting factor, I'll look at even the context of limiting factor with make or buy, right? Students don't like that type. They are used to the normal limiting factor. So it could be limiting factor with an option of make or buy. Now, in the long term, however, the business may dispense with or transfer some of its resources and may purchase from outside if it thereby saves more than the extra cost of purchasing. But if there's no spare capacity, a decision to make the component in-house might displace the manufacture of other existing products. And this could give rise to opportunity cost of lost contribution or additional contribution, additional cost of buying in those products if it is cheaper. In the longer term, management may look at other alternatives such as capital expenditure of machinery and other things. Don't worry about that. We'll look at that. But what I'm concerned about is that even if they've not asked you for qualitative factors, you have to give them. So things like, what's the reliability of the supplier who we are going to outsource to? Is his things quality as we expect? Not so. What is the price?
Yeah.
Is he going to dictate price for us? Is he a monopoly? Not so. Is it the only supplier available, or we have a choice of number of suppliers? What is the nature of his supply? Can we easily switch to another supplier easily? What's his bargaining power? I get it. Is he going to compete? What's the level of competition of that particular raw material? Lead time. Is it going to supply quickly? Not so. Do we have spare capacity? The labor, if we decide to buy from that supplier, does it mean that we are going to make our labor redundant? Okay, so some things are there. They are not in book. But I want you as a student to reason that, okay, if I decide to buy from outside, what is going to happen? The people indoor, are they going to lose their jobs? True or false? Because now we are not making again. So those people, am I still going to use them to do something else? Or I'm going to sack all of them. If I'm going to sack them, what's the redundancy cost involved? Are there going to be any legal costs? Some people may sue me, right? Have you thought about all of that? So this is how we do decision making. I realize that a lot of people just focus on only the calculations, which is not the right thing to do, right? You always have to look at the broader sense. After the decision, you can say, despite the above decision, the following qualitative issues should have also been considered. Do you understand? I hope you are getting somewhere. So that's the first thing you have to do is what? Make or buy decision. And that is what? Comparing the cost of buying to the cost of making, the relevant cost of buying to the relevant cost of making, or avoidable cost of buying to avoidable cost of making, right? So ICA can also ask you outsourcing, right? Why is outsourcing important? Are you getting? Why is outsourcing important? And what are the matters to consider before deciding to outsource? These are all past questions, and these are all potential questions that they can ask you, right? So what are the matters to consider before you decide to outsource? One, quality. So the quality of the outside supplier must be acceptable. Continuity of your supply must be guaranteed. So this supplier must not supply once and that is it. He doesn't supply again. Three, if the component is no longer produced by the company, the management should investigate whether the capacity freed up can be used to generate additional profit from a different product, right? And your management should also consider whether labor morale will be adversely affected. Stability in pricing is also very important. Reliability of your supplier, right? Even the reaction of your existing customers regarding the quality of the product. All these things should be assessed, right? And that is what you consider before deciding to outsource. Even if the decision says accept quantitatively or number-wise, consider these issues as well, whether we should actually accept the decision, right? So why should we outsource, or what are the reasons for the growing trend towards outsourcing, right? Outsourcing helps us to use a specialist contractor. It frees capital to be invested in our core activities. Contractors have the capacity and flexibility also. And then if we outsource, we can concentrate on our core activities. And it provides a basis for learning and training as well, and encourages us to scale or grow our business. And it can also enhance efficiency of production. I hope that is okay. So these are the reasons for the growing trend towards what? Outsourcing. So we are going to take some questions on make or buy. These ones are very easy. I do not want this one. I want one which would involve some sort of a little bit of weight. So let's look at the adapted version of the May 2013 question. I'll take this question and take another one where we are going to play with the things that we have actually learned. So let's look at Dolo. Dolo Limited produces component A for sale at 47 cedis per unit, right? So if they sell it at 47 cedis per unit to a manufacturer of computers And the company currently produces 15,000 units of component per annum. So this is their capacity. Okay, so this is the total cost. These are the unit costs. And they are saying that a supplier in a foreign jurisdiction has now offered to supply these same 15,000 units of the components per annum at a price of 39 cedis per unit. Okay, so they have decided to what? Price our components at what? 39 cedis per unit over a 4-year period without any change in price. Okay, if we accept the offer, the following are the effects on our current what? Operation. Do you understand? That one, the direct labor will be made redundant, but at a redundancy cost of 5,000. So this cost, what did they come with? Did they come with making or it came with buying? Are these further costs associated with making or buying?
Making.
No, look at it carefully.
Buying.
Making.
It is only when the supplier supplies us that these things will happen. That means you are not.
Yeah.
So are they connected
Okay.
or they are connected with buying?
Connected to buying.
They are
Buying.
connected to buying, meaning that they are avoidable cost of making, right? Do you
Okay. Yeah.
So it means that if I decide to make, I'm going to avoid all these costs. And if I decide to buy, then I'm also going to avoid the cost of making. Does that make sense?
It does.
Yeah. So now that you have that concept, you can use that same concept to answer this. So they are saying that if I decide to buy, then the labor I'm using will be made redundant. The direct materials and variable costs will also be avoidable, right? I can avoid them. And then what? The fixed manufacturing costs will be reduced by 18,750. That means that now, because I've decided to buy, I'm going to save fixed costs of 18,750 per annum. That means this fixed costs were specific fixed costs. Do you all agree? Because it's like, because I'm not manufacturing, this fixed cost doesn't exist again. Is it not specific?
Yes.
It's specific because if I carry out that, then that fixed cost will be incurred. If I don't again, then that fixed cost will not be incurred. It will be saved, right? That's why it's reduced by that amount. And the share of non-production overhead will stay as it is. So what does this tell us? That means non-production overhead is what? The share of production overhead will remain as it is, whether we buy or we don't buy, making it what?
In a phase.
Making it
Fixed.
no, it is fixed. We know. See, it will not change whether we buy or we
Unavoidable.
unavoidable. I want the right word. Making it irrelevant.
Oh, okay.
Irrelevant. It stays the same no matter what.
Yeah.
It's the same. It's irrelevant because no matter where you put it, it is still the same.
Irrelevant. Yeah.
Do you understand? So after this, it says what? Assuming further that extra capacity for accepting the contract offer from the supplier can be used to produce and sell 15,000 units of component Z at a price of 43 with the following assumptions, right? That all the labor force required to manufacture component A will be used to make component Z. Variable manufacturing overhead will remain the same. Non-manufacturing overhead will remain the same. Materials will not be needed, but additional materials at a cost of 15 will be required for production. 1. Should Dolo make or buy component A? And B, should Dolo accept the offer to use the available space? You see? Do you get it?
Yes. Sir.
Try both of them. So the first one is that, okay, now, which approach should we use? The differential approach so that you get used to, or we should try all the approaches. So since it's make or buy, what did we say? We say make or buy. What's the decision? What's the decision criteria? We compare what? We compare what? Avoidable costs
Oh, okay. Avoidable cost.
of making to avoidable cost of what?
Buying.
Avoidable cost of buying, right? So that is it. So all we have to do is gather the data. So what were our avoidable costs of buying? What's our avoidable cost of buying? If we decide to buy, what cost are we going to lose?
Okay. So Material cost.
Yes, that means relevant avoidable cost of buying is relevant costs of making, right?
Yes.
So if we decide to buy, that means we are going to what? Forgo direct materials. So we are going to lose direct materials of 210,000, right?
Yes.
Going to lose direct labor of how much?
180,000.
180,000. We are going to lose variable overhead of how much?
30,000.
30,000. We are going to lose fixed
Manufacturing.
150,000 also. And then we are going to lose the share of production overhead stays the same irrespective, right? Just
Yes.
ignore it. Do you all agree?
So it's irrelevant. Yeah.
So that gives us how much? We have 10,000 plus
Mm.
1,000,
390 or 20. 570.
570,000, right?
570.
So this
Yes.
becomes the relevant cost of what? Of buying, also. Of making, sorry. Relevant cost of making, or the avoidable cost of what? Of buying, right? Now let's try the avoidable cost of making. Okay. So avoidable costs of making, which is actually what? The relevant costs of what? Of buying, right? So if we decide to buy, what costs are we going to incur? First of all, we are going to incur the purchase price, Meboa,
Yes.
and the supplier is giving each to us at 39 cedis per unit. Not so, but how many units are we producing? Is he producing for us 50,000? Not
15,000 units.
sorry, 15. So that's 39 by 15,000, and that's what? 500 and what? 85,000. But apart from that, are there any other costs we are going to incur? Yes. What costs are we going to incur again? If we decide to buy, won't we incur redundancy cost of 5,000?
Oh, 5,000. Yes.
And they say what? Direct material and variable costs will be avoidable, right? Meaning that we will not incur
You know, incur them.
cost, right? We are going to have
Yes.
some savings in fixed costs. Fixed costs will be saved, meaning that one was specific fixed cost, right? Which will be saved. Of how much? 18 what? 750.
750.
It's a reduction to our cost because it's a saving. Not so. And they said share of non-production overhead will stay as it is. So with this decision, that means these are the total costs, right? Incurred, because the next one is a further assumption, the next one. So you are saying that, okay, so with this 585,000 plus our 5,000 redundancy minus 18,750 saving in fixed cost, we have 571,250. So what's the decision? Should we make or we should buy? Should we make or we should buy? When we buy, we have total cost of 571. When we make, we have total cost of 570.
So we are going to make
There's an incremental cost of how much?
Make
1,250.
that 571.
This 570. 570.
570. 1, 2, 3. 1250.
So what's the decision?
and so we
Make.
make
Dolo Limited should what? Should consider making what? Making the component in-house, right? Because it results in a what? A cost saving of what? Of 1,250. Okay. So you can say what? Other considerations include, other considerations include, yes, give me, talking about the qualitative factors. Yes, give me some. We've spoken much about these. Yes.
The redundancy cost.
Okay. Redundancy, not redundancy. Yeah, we want things that are not numbers. Redundancy. Okay. What else?
The
Reliability.
quality.
Reliability, quality. Yeah.
Supplier. Cool. Lead time. Lead time. Spare capacity. Also
Impact on staff.
impact on staff. I get it. Impact on staff morale. Reaction of management. Accessibility of supply. Anything else that you think about, right? It should be something you have thought about. I think it's relevant for the decision, right? And this will help you score the mark. Okay, my aim is score, right? That's what we are looking at. Does that make sense? I hope I've simplified it to your level. Now,
Yes.
what we are saying is that, what if we decide to do all these things, right? What if we decide to do all these things, but at the end of the day, what if we decide to do all these things, but at the end of the day, we still decided that we are going to pursue this one? So they are saying that, assuming that what? The extra capacity for accepting the contract offer from the supplier can be used to produce and sell 15,000 units of component Z at a price of 43, then the following assumptions should hold, right? That all of the labor force will be required to manufacture component A, are you getting it? Will now be used to manufacture component Z. And variable manufacturing overhead will remain the same. Non-manufacturing overhead will remain the same. The materials for component A will not be needed, but additional materials at a cost of 15 per unit will be required for production. Do you understand? So what will happen then? So now what we are saying is that, okay, looking at this, it means that we have extra capacity, right? We have extra capacity, and this extra capacity means that we need to check whether there's an extra contribution generated, right? Is there extra contribution generated from this spare capacity, right? Check and see. And this one only happens when we buy, right? True or false? True or false?
True.
Remember, if you make in-house, would you have spare time to do something else? If you make, would you have spare time to do something else?
No.
No, but if you buy, you have spare time, and that's what they are saying, that
Better. Yes.
can be used to what? Produce and sell these 15,000 units, right? For another product, which is now component Z, right? So let's check if component Z results in an extra contribution. Now it is telling us that component Z, are you getting it? Will have what? Selling price of how much? Of 43 cedis, not so?
43.
And all the labor force will be required, right? The labor force that are required to do A will still be required, right? So let's look at the variable cost. Let's check if this one is going to generate an extra contribution. So variable cost, they said we are going to use the same direct labor at what?
180.
No, the direct labor was 12 cedis, right? I'm working per, you can decide to work in total.
Okay, okay.
And then they are saying that what? Variable overhead will remain the same. So variable overhead was actually what? 2 cedis, right? That means variable overhead was 2 cedis. It will still remain the same, right? Because we'll use variable overhead to produce. Then they said what? Non-manufacturing overhead will remain the same. So the non-manufacturing overhead, which is the share of production overhead, they said it will remain the same, right? Then the fixed manufacturing overhead will also stay the same. But we cannot bring fixed overhead because we are looking for extra contribution. So they said materials will be required at a cost of 15 per unit. So direct material, how much? 15 cedis per unit. Now let's put together. What's our total variable cost?
29.
29 today.
29. You said it's 29. So deduct
Yes.
the price minus the variable cost. Let's see if it generates extra contribution.
14.
14.
It's an extra contribution of 14 cedis per unit, right? So this 14 cedis per unit by our 15,000 units is going to give us what?
$210,000.
So we are getting 210,000 extra contribution, right? Against what? The total, this one plus the total cost of buying, also, which was what? 571. Remember, this one is what? A reduction to our cost, right? Because it's income. Do you get it? So you are saying that the
Yes.
total cost was 571,250 against 210 that we are receiving, not so. So it means that the net benefit or the net cost of buying will be what?
This is 1,250.
How much?
361,250.
361,250, not so. Which is
Yes.
net cost. So now comparing this to make, which is better?
Bye.
Buying, because buying will still give us an extra contribution of 210. Not so, which further reduces
Yes.
the cost of buying. So it is better to buy under this circumstance than to make, which came at a cost of what? 570. Even if I eradicate this fixed overhead because it's the same everywhere, right? Because of the saving, this one will now become what? Let's see. Because the fixed cost stayed the same, right? All this one will be how much? 420,000, right? Still, what happens? It's still lower, right? Not so.
Yeah.
So it is still better to what? Buy, right?
Bye.
Yeah. Still better to buy. So on the basis of the contribution, Dolo should buy A and use the available spare capacity to produce Z, giving a total contribution of 14, right? For that particular one. That's how we assessed it. But you see, you can go this way, like what I did, which I taught you, right? You can decide to go make, buy. You remember this approach too? And I told you this is the best approach you can always use for exam. Do you remember? I hope this one is okay. You guys are cool with this. Or the one we did is not so bad. Or that one requires a little bit of technical knowledge. Which one do you prefer? This one or that one? I told you for exam purposes, which one should you use? Assuming you're under pressure. Assuming you're under pressure, which one should you use?
This one will do.
Which one?
Differential. You said differential.
Differential approach.
And which one is the differential approach? Make, buy, right? Is that not what we learned?
Yeah.
And you see, it's still the
Yeah.
same one. This one is 571,250. This is 420, right? Dulo should make at a relevant cost of 420 compared with what? The 571,250. Not so. Okay. Which we had. And then when we decide to now produce the new one, you can still do make, buy. But that one, you consider both of them to see if you still have extra contribution. But you realize that I got this extra contribution without working all this, right? Which we did here. That was the 14 we had per unit by the 15. Okay, which reduced our total cost of buying. So we had a net cost of buying, and we comparing it to making, it was still cheaper. So it means that we should what? We should rather buy rather than make. Makes sense.
Yes, sir.
So let's try another question again. Wobube. Wobube Limited makes 4 components, W, X, Y, and Z, for which cost in the forthcoming year are expected to be. Okay, so they've given us the various costs and the production unit. And they've given us the various variable costs of marginal cost. So we have direct material, direct labor, variable overheads, total variable cost, right? So we have all that. And they said directly attributable fixed cost per annum and committed fixed cost include, right? So let me ask you, directly attributable fixed costs, are they relevant or irrelevant?
Relevant.
Because they arose as a result. Are you getting it? They arose as a result of what? Of the decision. What about committed fixed costs? Relevant or irrelevant?
Irrelevant.
Irrelevant.
Because I told you yesterday that what a committed fixed cost is a cost you are committed to incur, right? You are committed to pay, irrespective of whether the thing has been paid, it was incurred in the past, right? Do you remember? You are committed to it. So let's see the fixed costs which are relevant. If it's relevant, you tell me. Fixed costs incurred as a direct consequence of making W, relevant or irrelevant?
Relevant.
Relevant.
Relevant. Because without making W, you will not incur it, right? Make it
Yes.
okay. 2. Fixed costs incurred as a direct consequence of making X,
Relevant.
relevant. Fixed costs incurred as a direct consequence of making Y,
Relevant.
Relevant.
fixed costs incurred as a direct consequence of making Z,
Relevant.
Relevant.
and other fixed costs which is not incurred in direct connection with any of them.
Irrelevant.
Irrelevant, right? It's a committed fixed cost, they told us. So far
Relevant. Committed.
it's irrelevant also. So I put it in a different color. And that's our total fixed cost. They said a supplier based in a foreign jurisdiction has offered to supply the component X, Y, W, X, Y, and Z at 12 CD, 21 CD, 10 CD, and 14 CDs respectively. Meaning we have to actually what? We have to actually what? Get them, right? Okay, so let's try and see. Make or buy. So first of all, let's come up with the relevant cost of what? Which one should we start first? Relevant cost of what? Of making, right? Also, relevant cost of making. So it depends on how you want to go. So I'm going to put here W, X, Y, and Z, right? Okay. So in that case, let's get it. So what becomes our total variable cost? So our variable cost was how much? Can just pick them up, right? This guy was what?
14,
17, 7, and
7, and 12.
I don't want to waste time. So I need my total variable cost, meaning that I'll take my variable cost per unit and multiply by the number of units, not so. So in that case, I know that this guy will give me what? I know how many units were here. This guy was 1,000 units, 2,000 units, 4,000 units, and then 3,000 units. So multiply and let's go. Oh, by now, you guys have got the gist. So multiply and let's go. What's our total variable cost? 14,000.
14,000. 34,000.
34,000.
28,000.
28,000.
Okay. Then we add the what? Specific fixed cost, right? We have variable cost plus specific fixed cost. So you see, we are getting the total avoidable cost, right? So let's add the specific fixed cost. What is the specific fixed cost? For W, it was 1,000, right?
Yes, sir.
Yeah.
It was 5,
And 5,000 for Z.
6.
X, Y is 6,000. Z is 8,000.
Okay. What about the 3,000? Does it have any treatment? The 3,000, does it have any treatment?
No.
Does it have any treatment? I'm only hearing similar voices. The 3,000,
No.
No,
why?
No.
because
Yes.
whether you take the project or not, we are still going to get.
Irrelevant.
So it's a sunk cost.
Yes. It's
It's
irrelevant.
irrelevant.
Committed cost.
Irrelevant, sorry.
Committed costs are irrelevant. Okay, so we have what? 44,000. Okay. Now, these are the cost of making. What about the cost of buying? So now, assuming we want to buy all the cost of buying, right? So let's see. So cost of buying, what was the purchase price per unit? Purchase price per unit. X, W, X, Y, and Z, right? They said this one we can get it at how much? 12 cedis, right? From the supplier. This one at how much? Check down there. This one at how much?
No, we can't see the
12,
screen.
21,
It's,
10,
it's here.
and
Yeah,
14.
it's 12, 21,
10 and
10, and
14.
14.
14.
14.
So what's the number of units? This one we were producing 1,000 units, right?
1,000
Yeah.
units.
Producing
5,000.
1,000.
4,000,
Uh,
3,000.
4,000 and 3,000.
So we multiply. This will be 12,000. Oh, is it 42,000? 40,000. And then this will be how
The
much?
last one is 42,000. The last one is 42,000.
Is this correct? 12,000, is it correct?
Yeah, 12,000. 12,000.
What is the relevant cost of buying, sorry. So what's our decision? This one, should we make or buy? The first one, should we make
We buy. This one, no buy.
or buy, right? Because this is cheaper.
Buy.
This one,
Buy.
big, right?
Yes.
Make.
Because this is cheaper. This one, we what? We
We
make
make.
cheaper.
And then buy.
This one,
Buy. Buy.
this management account. Right? So what's our decision if we are to write a report? What's our decision?
Mm.
The entity should what?
A company should
Should
buy product W.
make products what? X and Y, and should what? Should buy
Buy
products what?
product
W,
W
Z, and Z.
and Z.
From the external supplier. But other factors to consider include, yes, give me other factors to consider.
Availability.
Reliability of the supply.
Reliability of the supplier. Okay, 2.
The spare capacity.
Would there be spare capacity to accept other orders? Yes. Are we going to make some workers redundant because we are outsourcing? Not so. What about switching
Redundancy cost.
cost? Can we easily switch to another supplier? This one is a foreign supplier. So what about foreign exchange? Foreign exchange risk. Do you all get it? You see how I come up with the points? They said a foreign supplier, meaning there might be potential foreign exchange risk, right? What about lead
Yeah.
time? Cost and a foreign, how often would it take to get our demand?
Yes.
The demand?
Tariffs and
You get the idea? Will this affect staff morale or staff motivation? Do you see how I come up with these things? Even if they've not asked you after the decision, provided I am giving you a foolproof approach, meaning that even when people are failing, you don't have a chance to fail because you know what the examiner wants. Okay? In the market,
Hello, sir.
yes, boss.
Yeah, please, if we're making your final decision, the other factors,
Yeah.
with this one, 2 products is going for buying, and then the other 2 products is going for making. Is it necessary for you to split it and then make other factors, or you can make other factors altogether?
Oh, just mix them up.
Okay.
But if maybe the decision was specifically maybe buy, then consider the other factors that will not make it possible to buy or will make it possible to buy. Kofi, do you get it?
Yeah, I know, but I'm asking that if we're making other factors, can you write maybe S and Y. You know, S and Y
And you can do it
before
like
making.
that. You can do it
Okay,
like that. Yes.
okay.
So if it's make, these are the issues to consider for make. If it's buy, these are the issues to consider for buy. Very good.
Thank you.
You're welcome. Should we take another make or buy, or you are fine with make or buy? Can we move to shutdown decisions? Okay. Okay, so now let's look at shutdown decisions. Okay, where we have to shut down a particular division which is not doing well. Okay, shutdown decisions. Now, what are shutdown decisions? Sometimes we have to shut down a decision, a decision, a division which is not what doing well, right? That's 1, 2. The questions are too many. I don't want to solve all of them. You haven't watched the limiting factor video. We would have done make or buy under limiting factor. But for now, let's just go to shutdown or discontinuance decisions. Now, shutdown decisions can involve the following decisions: whether or not to close down a product line, department, or other activity, either because it is making losses or it is too expensive to run. So it's either that thing is making losses or it is too expensive to run. So if the decision is to shut down, okay, whether the closure should be permanent or temporarily, it should be considered, right? And this one has some non-financial considerations as well. So in evaluating whether to close part of a business, the cost accountant must consider: 1, a loss of contribution from that segment, savings in specific fixed cost if you close it, penalties resulting from the closure like redundancy, compensation to your customers, alternative use of the resources released, right? If you close down a division, there's spare capacity. What is the knock-on impact? For example, supermarkets often stock some goods which they sell at a loss. This is to get customers through the door, who they then hope will purchase other products which have higher profit margins for them. So maybe those goods that you've closed, they had some goods, right? What's the knock-on impact of those goods? Would they be scrapped off so that a loss, right? So what is the decision criteria? My decision criteria is to compare the avoidable revenue, the revenue you are going to forego, against the avoidable cost of shutting down, right? You see, I'm always using avoidable cost to take decisions. It makes everything simpler for me. But if you do not want, you can do shutdown. Do not shut down, right? Makes sense. I told you that differential approach always works like magic. Do you remember? Do you remember?
Yeah.
Yes, sir.
Yeah, so you can always use that. So what's the decision criteria? I said compare what? The avoidable what? Or the foregone revenue, right? Compare your avoidable revenue against what?
Unavoidable.
Against avoidable cost of shutting down, right? Yeah. So this is what you compare. So what other qualitative factors should be considered? So the effect of the decision to drop the product on society, right? The impact of the decision on demand of the other products, the psychological effects of the decisions on your customers, the impact of the decision on the image of the company, qualitative considerations, are you getting it? Mainly revolve around the overall effect of the decision on profitability. It is, however, difficult, if not impossible, to quantify the effect on the quantitative factors. This does not preclude management from critically considering them, as ignoring these factors would have a damaging implication. So when taking add or drop decisions, we consider whether the product at least produce a contribution towards recovery of fixed costs. Bearing in mind any contrary qualitative factor, a decision to drop a product can be taken if the product is not able to produce what? A contribution, which I taught you about. Everything is about contribution when it comes to decision making, right? So let's take this question. I think with this question alone is enough to do shutdown. I'll use different alternatives to work this out, and you see that it will still make sense. Now it says what? Jones Limited operates 3 divisions within a larger company, right? And the CEO has been shown the latest profit statement and is concerned that Division C is losing money. You are required to advise her whether or not to close down Division C. So we have what? Sales, we have sales, variable cost, fixed cost. And they said we are informed that 40% of the fixed cost is division specific. Division specific means what? It is specific what? Means a specific fixed
This
cost.
cost.
And the remainder 16% has been allocated arbitrarily to the divisions from head office, meaning that this is what? This is other fixed costs, right? Which has been
Yes, sir.
allocated. And I told you allocated fixed cost is not relevant. You remember?
Yes, sir.
Yes. So they say using relevant cost analysis, advise the CEO on whether or not the division C should be shut down, right? So we can use the approach we just learned, right? That get all the data. So with management accounting, always you get the data. So or you can redraft the whole thing again for all the divisions. That can also be done, right? But let's just get our decision. So the decision is to shut down what? Shut down Division C, right? Division C. So I can decide to use the opportunity cost approach, right? Which we learned. And we say, if we decide to shut down Division C, what are we going to benefit from? What are the benefits we are going to get, right? Using the opportunity cost approach. If we shut down that division, that means its costs are going to be saved, right? True or false? True or false? Do you all agree?
Sir, come again with that point.
No, we just learned opportunity cost. If we shut down that division, that means the costs in that division are now going to be saved. True or false?
Yes, yes.
That's what we learned. So savings in variable cost. That means the variable cost of how much? Of 30,000 are going to be saved, right? Then we will have savings in what? Specific fixed cost, right? The specific fixed cost too will be saved because you know that specific fixed costs only are specific to that division. And they said, well, 40% of the fixed costs are division specific, meaning 40% of that what? Fixed cost, which was 20,000, is how much?
8,000.
8,000, right? So these are the total benefits I'm going to get, right? So total benefits I'm going to get is what? 38,000, right? Let's compare to the total costs. What total cost am I going to get? I was earning revenue of 40,000 from that division, right? But if I shut down that revenue, will I earn it again?
No, sir.
Meaning I'm going to have a loss in revenue, right? And how much revenue am I going to lose?
40,000.
40,000. So is this going to result in a net benefit or a net loss?
Net loss.
Right? Which means it's a lost contribution also of how much?
2,000.
Okay, so is it good to shut down or not to shut down?
Not to shut down.
Not to shut down, because if we shut down, we are going to lose 2,000 contribution. Get the idea? So is that how I used opportunity cost to get the 2,000 loss contribution, right? So you can say the decision is to not shut down, also, because the division also produces what? Produces an extra contribution of what? Of 2,000 also, which will be lost if shut down, if the division is shut down or something like that. Do you understand?
Yeah, this your handwriting is difficult too.
No, I am speaking. Sometimes I'm scribbling. So you just have to ask. I said they should not shut down because the what? The cost or the division produces an extra contribution of 2,000, which will be lost if
Okay.
it's shut down. Just write your own language. Is he under- is he understood? Is that
Yes.
bad or it's okay? You understand this, right? We did that for
Yes. Sir.
at home. You can use the same. It doesn't really matter because there's only one division you are trying to see whether it should shut down or. And I also gave you a decision criteria. What was the decision criteria? I said we compare what?
So please, can you scroll up? Let me screenshot here. Thank you.
I said we compare what? Do you remember? I said we compare our foregone revenue. Do you remember? We compare our foregone revenue, which is 40,000, against our avoidable cost, right? Do you remember? Do you remember? That was the decision criteria I gave you. So you can use this approach. What is the revenue I'm going to lose if I close the division? And then what are the avoidable costs of shutting down? If I shut down, I'm going to avoid the variable cost of how much? Of 30,000, right? If I shut down, then I'm also going to lose what? The specific fixed costs, which was what? 20% of what? The 20,000, what was 40%, right? 40% of the 20,000, which was what? 8,000, right? So this one gives me 38,000, also, which means that there's going to be what? An extra contribution that this division is earning. That is why we should not shut it down, because in actual sense, we have a contribution of 2,000, right? With other fixed costs worth 12,000. It means that if we deduct this fixed cost, that is why we are earning 10,000 loss. But if this 2,000 is not there, that means we only have 12,000 fixed costs, right? Which is a loss of 12,000. So this 2,000 is sort of what? Covering a bit of the fixed cost, but cannot cover all. That is why you shouldn't shut down. Does that make sense? Does that make sense? Does that make sense?
No, sir.
Yes or no?
No, sir. So, sir, what happens if you use alternative one and then somebody use alternative two? You know, the final decision will not be the same.
No, it's the same decision. You are saying that if we shut down right now, how much revenue are we foregoing? It means that right now, if you shut down, you are not going to get this 40,000 again. And you are not going to incur this 38,000 again, right? Meaning that you are going to lose this 2,000, which was already earned in that division. It's still the same as this one, right? And loss contribution. This one is the direct.
Oh, okay.
The same decision. But this why I started from the top. That's why I said compare what you would have lost, what you would have gained if you. This is like what you would have gained if you were operating the division, and this is like what you would have lost if you shut down the division. It's the same. So you lose 2,000 if you shut it down, and you what? You will gain 2,000 if you kept operating it. Is it not still the same? Is it still not the same?
Yes, sir, it's still the same. Extra contribution. Yeah.
Of course, which would have been lost if you shut it down. Not so.
Yes.
Yes. So another student would also do what I taught you, right? Which is shut down what? Shut down the division, or do not what?
Shuts down the
I
division.
told you that this is the best approach, right? In case you're under pressure, you can always go with this. So straightforward. If we decide to shut down, are we going to earn revenue? No. If we don't shut down, we are getting revenue of 40,000. True or false? True, right? Let's go to our costs. See, this one there is always easy. If we shut down, do we have any variable cost? No.
No.
Shut down, we have variable cost of what? 30,000 also. Okay. Let's go to fixed costs. So we can break our fixed cost up. Specific fixed cost, right? Which is what? 20% of what? It's 40% of the 20,000 also. And that means other fixed cost is what? 60% of the 20,000 also. True or false? So it means that if we decide to shut down, do we have any specific fixed costs? No. Why? Because those fixed costs are specific to the division. But if we do not shut down, that specific fixed cost will still be there, right? Of what? 8,000 also. If we shut down, the other fixed costs will still be there, also. If we do not shut down, it is still going to be there, right? Making it irrelevant, but it will still be there. Also, so if we should put it together, these ones are all costs, also. These ones are all costs. So this one means that if we consider a profit, this one results in a loss of 12,000, but this one results in a loss of 10,000, right? Resulting in an incremental of 2,000, right? And which is better? Should we shut down or we shouldn't shut down?
If you shut down.
Should we shut down or we shouldn't shut down? Negative 10,000 and negative 12,000, which one is higher?
Negative
If 10,000.
negative 10,000 is better.
Yes, this
So
is
we shouldn't shut down.
we
So
shouldn't
you
shut down.
shouldn't shut down.
If we shut down, we incur cost of 12,000. We have a loss of 12,000. Don't shut down. We only have a loss of 10,000, meaning there's some 2,000 somewhere, reducing this.
We shouldn't shut
At least
Shut
you
down.
keep your staff active.
Yeah.
Yes, so those are qualitative issues. Are we okay with shutdown? So
Yeah.
the whole thing is the two things, variable
Yes, sir.
specific fixed cost. But it seems this method is always easier. Or what do you think?
Yes. Yes.
So now we have all agreed that this is what we are going to be using for make or buy, shutdown, or anything that involves, right? Yeah. Okay. That's why I taught you all different alternatives. So assuming the divisions were many, then doing this individually will take time, right? So what you can do is you can use the normal approach we learned. Then you create columns for each of the divisions. Make sense? So that was it. So let's look at dropping a product, right? So we have a product here, and then we are just going to look at whether we should drop the product or keep. Which product should we drop and which product should we keep? Now, this company makes 3 products: jam, bread, and tea bag. And we have what? The material cost, labor and expenses, total cost. We have its selling price, right? But I told you that any decision that you take, what is the most important factor?
Contribution.
Contribution. So all we have to do is take each of them and try to establish the contribution for it, right? Okay. So we have what? Jam, bread, and what? Tea bag, right? Not so. Let's look at which one we will drop. So selling price was how much for each of them? Jam, what was the selling price for jam? This was 22 cedis, 25.
25. 80.
So we less what? We less variable cost, not so.
Yeah.
Yes, please. The variable cost, you have direct material.
10,
Material. This was 10 CDs
10, 11, 13.
and 13 CDs. Okay. Then we had direct labor,
Labor,
which was also variable, 5 CDs,
6, 8.
6 CDs, and 8 CDs, right? Then we have expenses, right? Variable expenses,
Our expenses.
2 CDs, 2 CD 50, and then 3 CDs, right? So let's add our total variable costs. This one gives us what? 17. This one gives us what? 18.5.
18.5.
This one gives us
20, 24.
24.
The second one is 19.5.
13 plus 8 plus 10.
19.5.
Freedom.
The second one, the bread.
Plus.
So let's find out.
So 22 minus 17. 5
5.
minus 19.5. Then 5.5.
This all gives us how much? You said it's 5.5.
5.5, yeah.
The
6 and 6.
6.
6.
So which product should be dropped?
Product jam then bread, okay.
It's jam because it has the lowest contribution.
Yes.
Yeah. So sometimes it's not that always is the lot making one you drop, but you may drop the one which has the lowest
The contribution.
because we do not have the resources to produce all of them. But if we should drop the one with the lowest contribution.
Why do we always focus on the contribution?
Because contribution is the profit that is available, which can cover fixed costs. So that means that without that profit, fixed costs cannot even be covered. So that's the least thing you should always consider, right?
Okay, okay.
So tea bag has the highest contribution, followed by bread and jam, right? Jam should
Yeah.
dropped. Jam should be dropped. Okay. So that was it for the specific decisions. Now we are going to special pricing decisions. We are going to do a special pricing decisions.
Please, so aside the video, will it be possible for you to share the PDF of these files?
PDF it's a full book.
Oh, okay.
Full book of this is a management accounting textbook.
Because you have shared some with that, and that has been helpful. The first, the one with the relevant, the lecture notes, that one is okay. Anytime you find it, but you just refer to it.
Okay, can you reshare that document? I see since my computer crashed, so that everybody will get access to it.
Oh, okay.
Maybe I may try and share some lecture notes.
All right. Thank you.
Okay, so let's look at relevant cost and minimum pricing decisions. And now let me explain. This is where they get students a lot. And this that something like this may show up, right? Write it down. Oh, I said something like what?
This
may show up. This one is where you play. This is where the real relevant costing is. Okay, this is where we do the proper relevant costing. The proper relevant costing. What did I say? The proper what?
Costing.
This is where we do the proper relevant costing. So, with minimum pricing decisions, right? When we say minimum pricing decisions, okay, what we are saying is that the minimum price itself, the minimum price is equal to the relevant cost. What did I say? The minimum price is equal to what?
The relevant cost.
The relevant cost, right? So look, if the relevant cost is the minimum price and somebody gives you a price, so let's accept the offer. Let's look at the decision. Okay, the decision is that if the offer price is greater than the minimum price, which is the relevant cost, right? Should we accept or reject?
The question again.
If the offer price by the customer is more than the minimum price, should we accept or reject?
You should accept.
Accept.
More than our minimum price, right? And if the
Yes, sir.
offer price by the customer is what? It's less than the minimum price, which is the relevant cost, right? We should what?
Should
Reject.
reject.
Should reject the order, right? Because see, this is even the minimum price, and you are giving us something lower. That means that you're bokakra. Don't you agree?
Yeah.
Yes. But the issue is to get this is the problem. Getting this is where students have a problem. Now we are going to take our time and understand each relevant cost for each item of cost, okay? Each item of cost has its own what? Relevant cost. Make sense?
Yeah.
So let's take them one by one. We'll first start looking at relevant cost of material. Relevant cost of material. So relevant cost of material. And I'm going to list all the possible relevant costs that we can have for material. So first of all, let me ask you something. If you do not have something you want, what do you do? Assuming you have all the money. If you don't have, what do?
You buy.
You buy, right? So the first thing is what? Purchase price, right? The current purchase price or the replacement cost. Let me use that one rather. The replacement cost, the current replacement cost, right? If you have to replace it or you have to what? Buy it, the current purchase what price, right? If you don't have, then you buy. If the material is not in stock, then what do?
You buy.
You buy. That is the rule. The first thing is, if not in stock,
You buy.
if not in stock, go and buy, right? Buy. That's the rule. Meaning that the relevant cost becomes the replacement cost or the current purchase price, right? Let's look at the next type. The second is, if a material, okay, is used often. Look, a material that is always used. Let's say that the water in your fridge that you drink on a day-to-day basis, right? If you have a program at your house, and then you are going to use that water, don't you replace it immediately?
Yes.
Because that water is not used for program, it's used for your normal consumption, right? So anytime you hear a material that is used often or is frequently used, that means if you are going to do a special product, because it's frequently used, if you touch it, you must replenish it, meaning you still have to what? You still have to
Replace it.
meaning
Replace
the
it.
replacement cost becomes a relevant cost, right? So if used frequently, if the material is used frequently, must be replenished, right? Must
Yes.
be replaced. So we still go and buy, right?
Yeah.
That is the rule. So if it is not in stock, buy. If used frequently, it must be replaced because something used often, it mustn't be short, like water in your house. If a visitor comes and you you give him that water, don't you replace it? You must. Do you
You
understand?
must.
That is the rule. Let's go to the third. This is when the material has a use. What if the material has no use? If the material has no use, then we are saying that it has no use, right? If it has no use, then no relevant costs. Unless it can be scrapped off, right? So if it has no use, but we can scrap it off, that means the relevant cost is what? The scrap value. Make sense? Because you have decided not to scrap it and you are using it for your business. So the scrap value becomes a relevant cost. If you don't see scrap, then you see something like relevant value. Do you get it? Look, I want to use a material to maybe make my book, right? Now, that material I want to use to make this new book is a project. That material has been lying in my house for a long time. Maybe it's A4 sheet. It does not have any alternative use, but I can sell that A4 sheet to somebody at 50 cedis, right? But I want to use it to make my book. So that scrap value of 50 cedis, have I not forgone it to make my book?
Yes.
So is it
So
not,
opportunity for me. Yeah.
doesn't it make it relevant?
Yes, sir.
So in that case, that scrap value becomes a relevant cost because I have forgone scrap to use it in my contract. Make sense?
Yes, sir.
Okay. The second one is when it has no use and it has no scrap or anything, then there's no relevant cost. Your relevant cost is 0. But when it can be scrapped up, the scrap value becomes a relevant cost, right? And 2, if it has an alternative use, let's say that A4 sheet can also be used to manufacture something else, right? That would generate me a contribution of 80 cedis. Okay. So if it has an alternative use, then the relevant cost should be what? The alternative use, okay, contribution. So let's say that A4 sheet could have been used to manufacture what? Maybe a paper car, okay, which I can sell. I can use the A4 sheet to manufacture a paper car, which I can sell for 90 cedis, right? But then I want to use it to make my management accounting book. Meaning what becomes a relevant cost here?
Yeah, come again, please.
I can use the A4 sheet, right, to manufacture paper car and sell to students, school students at 90 cedis contribution, right? But I decide to still use it for my MA book and not use it to make paper car. So what is my relevant cost here?
The 90 cedis.
Alternative user.
It's the 90 cedis.
The 90.
Yeah.
Of course,
Okay.
I have forgone this contribution to still use it in my contract. Meaning that this is what? The alternative forgone to obtain this next best, which is the MA book, which is my contract I want to do now. Meaning this contribution has, I told you anytime a benefit has been lost, not so, it's a cost to us, right? So this one I would have earned it, but I have lost it, which means it becomes what? A cost to us now, which makes it relevant. Okay? But what if these both of them are available? Then what do we do? Assuming I can scrap it off for 40 cedis and I can also use it to make paper car of what? 90 cedis. Then what do we do? I told you anytime there are two alternatives, you choose what?
Opportunity
The one with the one that gives the best contribution.
Yes, the one that is higher. If I should sell it now, if I should sell that A4 sheet without using it for anything, scrap it off for 40 cedis, or use it to make paper car and sell for 90 cedis. As a rational consumer, which one will you choose?
90 cedis.
90 cedis. But then you would have chosen 90 cedis. But that same 90 cedis, you are not going to get it because you are using it to produce the management accounting. Do you understand? So anytime you have alternative use scrap, what you are going to do is you consider the highest, right? The one with the highest is the one you choose, and that becomes the relevant cost. Does that make sense? So in simple terms, we said that what? If material is not in stock, what do?
We buy.
We buy.
We buy.
Meaning relevant cost becomes what? The replacement cost.
Replacement cost.
Nicely said. If in stock, but it is used what? Frequently.
Replacement cost.
It has to be replaced, right?
Yeah.
Relevant cost becomes the replacement cost because they be who you see, you must replace. Okay. 2. If in stock, but no use, also
Realizable value or realizable cost.
if no scrap, value or realizable value, then what do? The relevant cost,
Alternative is
right, is nil.
0.
That's no scrap value. It does not
Yeah, 0.
0. But what if it has a scrap value? If can be scrapped,
So realizable value.
then
The scrap value.
that means the relevant cost is the scrap value
Scrap value.
or the realizable
Yeah.
value, right?
Yeah.
Okay. If in stock, but can be used for alternative products. And relevant cost becomes the contribution, right? From the alternative, not so.
Yeah.
But if can be scrapped and also for alternative, then what's the relevant cost? The higher
Of replacement.
of scrap and alternative, not so. True or false?
True.
Yes, then you choose between the two. I hope this diagram is going to help you. So write it down. And this one can help you solve any relevant cost. And usually with relevant costs, it's material that is difficult. But I thank God that you've understood it easily. So we are going to take some questions and then we see that which one is relevant and which one is not relevant. So let me ask you, the cost at which we bought the material years ago, would it be relevant?
No.
Why?
Use the current market price.
No, I said the cost at which we bought it and it's in our balance sheet. Is it relevant?
No, that's historical cost. It's irrelevant.
It's not relevant.
Tank.
Historical
I
cost.
want you to use the
Sunk cost.
tank cost.
Historical. Sunk cost. Okay.
Tank cost.
Past.
It's past. The day we bought it is no longer relevant because we bought it for a different purpose. Now we are doing a different contract, making it a sunk cost.
What of if he said the historical cost?
Use the word sunk because you are doing management account. Yes,
Thank you.
historical cost, but management accounting has its own term. Sunk or
Thank you.
past cost.
Okay.
However, you are not wrong if you say it's historical.
Yeah.
If you say book value is sunk, right? Because it is some cost some years ago depreciated to date. Sunk.
Okay.
Irrespective of, right? And mostly accounting items are adjusted, making them non-cash flows. You know that. And we all know that non-cash flows are not what? Relevant. Because what's a relevant cost? A future incremental cash flow arising as a direct consequence of a decision. Is that not so? Is that not what we learned?
Yeah.
Sure.
Yes, sir. Yes, sir.
Take down, and then we are going to take some aspects of relevant cost. Then we are going to cost the full pricing decision to see whether we should accept the price given by the customer or we should reject the price given by the customer. Are we okay? So let's see. Are you done? So right, relevant cost.
Yes, please.
Have you done all of it?
Yes, please.
So let's see. So Konimo Limited has got an order to supply a product called Pato to Konsia Limited. To make the product called Pato, the following material cost data are available. Now, material M2, which will have to be purchased specifically for the order, cost 250. It is not in stock, so we have to purchase. What is the relevant cost here?
Replacement cost.
Which is what?
No. 250.
It says which will be purchased.
Yes.
And so we have
The estimated cost or purchase cost
Yes. So is this not the
yeah,
relevant? It is.
is relevant.
We don't have it
250, yeah.
to buy now. They have not bought it already. We don't have
No.
it. And if we have to buy now, we have to buy it at 250. It means this is the replacement cost or the current
It's a replacement cost, yeah.
or the current purchase price, which is 250. Okay, which is still relevant, right? Material M3 is already in stock. It was purchased at 100 cedis. Purchased at 100 cedis. Relevant or
cost.
irrelevant?
Some cost.
Sunk cost.
Irrelevant.
And has no other use, but could be resold for 45.
45.
So which is the relevant cost?
45.
45.
Scrap value 45.
45. Nice. Material M4 is already in stock and used regularly in the company. Was purchased at 350.
Sunk cost.
No, we have to replace it. Regular use, so replacement cost.
Replacement cost.
Yes.
So 350 is relevant.
Because you have to replace it.
Yes.
Yeah.
It's not adaptation.
Nice. Okay. You are getting there. You are getting there. We'll come to direct cost of labor and overheads, but then I just want us to do only the material of this one, right? Only the material.
Okay.
So we have a special 1-year contract, right? Which has been how we utilize the machine, okay? And these are the information, the material, 4 types of material are required as follows. So let's see. Looking at this, okay? This is the material W, X, Y, and Z. How many? We have materials in stock, the unit, and we have materials that we require for the contract, and the purchase price, that's the book stock, the purchase price of the stock, right? The historical cost. Do you get it? The historical cost, the current buy-in price, which is the replacement cost, and then what? The resale price or the scrap value. So let's see. Now, material W, how much do we need for the contract?
300.
So material what? Material
W.
relevant cost of material. So material W, we need 300. But how many units are in stock?
1,200.
1,200.
You need 300, but there's 1,002. That means we can pick from the 1,002, right?
Yeah.
Yes.
But we have
But
to,
there is an additional information.
you have to look at the additional information, right? They said W and Z are in regular use within the firm. Anything that is in regular use, what do?
We replace it.
Replace.
Meaning this 300, we have to go and buy all, right?
Yeah.
Yes.
Yes, sir.
1,002, even if we touch it, we have to still replace.
Replace it.
So that means all the 300 must be gone to buy at what? We must buy at what?
1 CD
1.5.
50 pesos.
Material is used frequently, so we'll buy. We will buy. We'll use frequently, right? So we buy, not so. How much do we buy? We buy.
1 CD 50 pesos.
So we need 300 units at what?
300
Yeah.
units.
150 at the current.
Price at the current buy-in price, 1 CD 50 pesos. Okay, that gives us what? That's 300 by 1.5.
150.
That's 4 CD 50 pesos. Then we have material what? Material X, right? And they said X could not be sold if not used for the contract. And there are no other uses for Y. So X could not be sold if not used for the contract, right? But then S has an alternative use. Also, which is 2 CD 10 pesos scrap. Can you see? And they are
Yes, sir.
saying that X, we need how much? We need 1,001 for the contract.
1,100.
But we only have what?
200 in stock.
Okay. So if we don't have, we buy. Mebwa, how much of X do we need to buy? We already have 200.
900.
One.
So buy 900.
We are going to buy 900 units of X. And when we buy, what's the market price?
Okay, so 2 CD 80 pesos.
Okay, that one we can buy, right? At 2 CD. So 900 will be bought at 2 CD 80 pesos. And that gives us 2,520. Then what about the one in stock? The one in stock, we should have scrapped it, right?
We could have scrapped it, yeah.
But we are not scrapping it, meaning that we are going to lose what? Those 200 units at what? That 2 CD 10 pesos will be lost. True or false? Which is
True.
a
True.
so we have what? 420. Does that make sense? But why
Yeah.
are we not touching the purchase price of the? Why are we not touching this one?
It's a sunk cost.
The
That's
start
a sunk cost.
line. Like how you guys are. That get. Okay, so in that case, we have 2520 plus 420. That means we have 29 what?
2940.
9
2940.
for this one, right? So let's go to material Y, right? Okay. So material Y, what did they say? They said there are no other uses for Y, which has been deemed to be obsolete. But when you look at the table, there's a scrap value for Y, right?
Yeah, 0.6.
Okay, 0.6. So since Y, how many did we need?
600.
But do we have some in stock,
Yeah, we have
Yes.
3,000 stock.
which can still be scrapped, right?
Yes.
We are foregoing the scrap. So that 600 we need could have been scrapped at what? 60 pesos, not so?
Ah.
Meboa, could have been scrapped at 60 pesos. So we have 360. Make sense? What about material Z? What about
I,
material
I,
Z?
I will
Regularly used.
It's regularly used. And anything we
within the
regularly
first.
use, what do?
We replace.
We replace, right?
Replace.
This one we replace, meaning we go and buy. We buy all that we need. Okay, we needed 1,002 for the contract, but there's 1,008. So we go and buy all the 1,002
1,002.
at 2 cedis. Not so.
Yes.
This is plus 2,100, not so.
Yes.
Yes, sir.
So put us plus 2940 plus 2940 plus 1. So we have 6150 to be the relevant cost of material. Okay. Relevant cost of material. Did you understand?
Yes, sir.
So if you don't have, you buy. Use frequently, buy. No
Bye.
alternative use, 0. But if they have scrap, you scrap. If alternative use, right? Then the alternative use becomes the relevant cost. But if you have to choose between scrap and alternative use, you go for the highest, right? That's it. Okay. So are we okay with relevant cost of materials?
Yes.
Okay. Now let's go to relevant cost of labor. Okay. Let's go to relevant cost of labor. Now, if labor is reassigned tax to take up a new project or product, the variable cost of labor, variable overheads, and the contribution foregone are relevant for decision making. The key question here is there spare capacity? Now, if there's spare capacity within a department, additional work can be undertaken at no extra cost. So if there's spare capacity in the question, it means that that extra work we are going to give labor, it will be at no extra cost because they have spare capacity which they've already been paid for, right? So the relevant cost of labor becomes nil. Do you get the whole idea? So it means that in the question, if they tell you that there's spare capacity or the question says there's idle time, meaning that you have already paid for them already, right? So the payment that you pay the labor is a sunk cost. But however, now you don't have to pay them anything extra again. So they can do the work at no cost. So if no extra cost, that means the relevant cost is 0. Does that make sense? Does that make sense?
Yes,
sir.
please.
You were working for me, right? And I paid you. But because of doing so, you are idle and I want you to do some work. Do I have to pay you again?
No.
No, sir.
So during that period, the relevant cost becomes what?
0.
0.
Right? So have that one. The same way, if I have to pay you extra, something like overtime, the overtime, is it relevant or it's not relevant?
Relevant.
It's relevant because it's an incremental cost, right? It's an additional cost that you have to get for doing additional work. Okay, so that's the only thing. Idle time 0, overtime additional, incremental, making it relevant. Makes sense. Make sense?
Yes, it makes sense.
Yes. Now, if a department is working in full capacity, then additional work can be undertaken only in two circumstances. Okay. So all your departments are full, people are working. Then what do we have to do? Either we hire more employees, right? So hiring more employees means the relevant cost of labor is the current rate of pay given to the employee,
Okay.
the variable cost.
Yeah.
Okay. So variable cost of labor is relevant. Then, even if we can't hire more employees, then we should be able to shift workers from another department. And those people we are shifting from another department, remember that they are also engaged.
Engage, yeah.
They
The
are engaged
opportunity.
already. Aha.
Mm.
So if they are engaged, that means they are earning some contribution in that department. So if I shift them there, that contribution will be foregone. Meboa.
Yes, sir.
And if that contribution is foregone, it means that that contribution, which would have been earned, is now lost. So it becomes a cost to us. Do you remember? If it
Yes, sir.
becomes a cost to you, or a revenue, a saving to you, if it's a cost for, remember, that's what we learned opportunity cost. So in this case, the relevant cost of labor will be the lost contribution from not producing the alternative product or not working on the other work. This can be calculated by taking the sales value of the units of product, which will now be foregone, and deduct the cost of producing them, but excluding what? The labor cost, right? Workers will still have to be paid, even if they are working on another product. True or false?
True.
So you just calculate the loss contribution plus the workers that you pay to the what? The workers working on the new product or work, right? Always remember this. So for labor, those are the tricks around labor. If there's no spare capacity, relevant cost is zero, right? And if there's spare capacity, relevant cost is zero. If you have to pay overtime, relevant cost is the overtime, right? Do you understand? If they're working in full capacity, you have two options. Either you hire more employees, that becomes the current rate of pay or the variable cost. And if you have to shift workers from another department, then how much are you paying them? Plus, what's the contribution foregone? Make sense? Make sense?
Yes, sir.
So let's see. COPA has received an order to supply a special component that requires 250 hours of skilled labor at 3 CD 50 pesos per hour, and 3,000 hours of unskilled labor at 2 CDs per hour to Anansi Limited. The skilled labor is in short supply, and COPA Limited will have to employ skilled labor to manufacture the component. The unskilled labor will have to be diverted from another work, which is expected to earn a contribution of 3 CD 50 pesos per hour. So what becomes the relevant cost of labor?
350 per
So
hour.
with the skills labor,
So first we have
you need them, but you don't have.
so skilled labor. The said skilled labor, we will what? We require 250 hours, right? And we pay each of them 3 CD pesos. These ones we can employ them to work, right? And
Yes,
cost
sir.
us 7,875 also. Okay. Now we need 3,000 hours of unskilled labor. And we pay them 2 CD per hour. But the thing is that the unskilled labor are in short supply, no so, and therefore they have to be diverted from their work where they're already earning contribution. So it means that if the unskilled labor comes, okay, if the unskilled labor comes, first of all, you are going to pay them their rate of pay. How much will we pay them? How many hours do we need them for? The unskilled labor.
You need them for 3,000 hours.
We need them for
3,000 hours.
within those
3,000 hours.
hours. We are going to pay them 2 CD per hour, Meboa.
Yes, sir.
Mm.
We are going to pay them 6,000. But here lies the case, we have to divert them from somewhere. And they are that place, they are losing contribution also of how much?
Yes, sir.
They were
3
earning
cedi 50 pesos.
pesos per hour, but we need them for 3,000 hours here, right? So for all the 3,000 hours, they are losing 3.5. Not so. So 3,000 by the 3.5 gives us what?
10,500.
500. That means you have
10,500.
you have 16,500, right? To be the unskilled labor. So 7,875 plus the 16,500. That gives us 24,375. No, so for the relevant cost of what? Relevant cost of what? Labor, right? Are we okay with relevant cost of labor? This
Yes, please.
is as far as they can go, right? Anytime you do not have the labor, then you have to what? Employ the labor or look for it. Incremental, right? You didn't have, now you have. It is incremental. Right? Okay.
Yes, please.
Now let's look at relevant overhead costs. Then we look at relevant machinery costs. Then we put all together into a special price, right? Now, generally, variable overhead are avoidable. You know that. And therefore, relevant costs. We all know that variable overhead are always relevant costs, right? And what other overhead cost is relevant? Specific fixed cost, mebwa, or incremental.
Yes.
Yes.
Increment.
Yes. But if you see unavoidable fixed costs, that means fixed costs which are allocated or which are apportioned or which do not change, right? They are irrelevant. So generally variable overheads which are avoidable are relevant costs, and fixed costs which relate to existing facilities and therefore unavoidable is irrelevant. However, additional or incremental fixed costs are relevant overhead costs. We know this already, right? So still under the same contract. Already we've done cost of material to be 6,150. We have cost of labor to be 24,375, right? Let's go to variable overhead costs. Relevant overhead costs. So it's the same pricing that we are building up with. So that's how you do it. So relevant overhead what? Costs. So they said what? Copa has received an order to supply a component that will require 250 hours of skilled labor. Now overhead are absorbed, they are absorbed at 12 cedi per hour, per skilled labor hour, of which fixed overhead absorption is 10 cedis per unit. Is it relevant or irrelevant? Fixed overhead absorption, 10 cedi per unit. Relevant or irrelevant?
Irrelevant.
Irrelevant.
I told you any absorbed fixed cost is OAR. It's irrelevant. It's an estimate, right?
Yes, sir.
But if the whole thing is 12 and they are telling us that 10 cedis is fixed cost, that means how much is variable cost?
2.
2 cedis. And variable cost is relevant, right?
Yeah.
Yeah.
Okay. So this is relevant. The 10 cedis is irrelevant, right? And additional marketing costs will have to be incurred at a cost of 10,000. Relevant or irrelevant?
Relevant.
Why? Why is the additional marketing cost relevant?
If it relates to it, specific.
It's specific or it's incremental, right? It's an additional cost.
Incremental.
So in that case, you are saying that, okay, if we should put it together, we have what? Variable overhead cost, right? Which is what? 2 cedis per what? Per labor hour, right? And how many labor hours do we need? 250. Not so?
Yeah.
That's 4,000 what? 500, not so? Then what else do we need? We have incremental what? Marketing cost, not so? And they said we have to what? Get 10,000 for additional marketing. Meaning we have 14,000 what? 500. Not so? And this becomes a relevant cost of what? Overhead. Not so? The fixed
Yeah.
overhead is what? Allocated and hence irrelevant for decision making. Makes sense? So the last thing I want to talk about is relevant machinery cost. Now, the historical cost of machine and depreciation are irrelevant for decision making, okay? So if you get a question and they told you, oh, you bought this machine at 5,000, irrelevant. Depreciation, non-cash flow, irrelevant. Hence, book value, because cost minus depreciation is book value. Making book value also what? Irrelevant. Make sense?
Yes, sir.
Yes.
Only thing that is the machinery cost is that if the machinery will have to be purchased, meaning in the future, then that purchase cost becomes relevant the first time. But if it was purchased already, historical cost, sunk cost, right? Irrelevant.
Yeah.
The hiring charges, if you have to hire the machinery, meaning you have to rent the machinery,
It's relevant. Relevant.
charges, the relevant
Relevant.
charges become relevant, right? Because it's something
Yeah.
you now. Also, if the machine will fall in value through use, okay, restate value. Like if I can sell it now for 2,000, I realize in 1 year time I can sell it for 500. That means I've lost 1,005 in its value, right? That one
Yes.
is relevant. And also, if there will be extra repair costs or extra maintenance fees for that machine, then it becomes relevant. So when it comes to machine, these are the costs of relevance. These are the costs of relevance or the relevant cost. The hiring charges, if the machine has to be purchased for the first time, all in restate value, then the extra repair costs or maintenance costs to run the machine under that project. Makes sense?
Yeah.
So based on the same decision we took, right? This one. Now let's look at the relevant cost of the machine. They said what? The machine cost 25,000 5 years ago. Relevant or irrelevant?
Irrelevant. Sunk cost.
And has been depreciated by 4,000 per annum on straight line basis.
Irrelevant.
Irrelevant. Depreciation is irrelevant.
Not cash flow. And that has a book
Yeah.
value of 1,000.
Hmm.
Book value.
Book value.
The book value is irrelevant, so it's irrelevant.
It's a
Book
sunk
value
cost, so
minus depreciation, right?
yeah.
Yeah.
The machine could be sold now for 8,000 or in a year's time for 1,000. What has happened to this machine? It has
Crap.
lost value, right?
Lost value.
Machine fall in restate value.
Yeah.
We can sell it for 8,000, but now we can sell it for only 1,000. How much have we lost?
7,000.
We have,
7,000.
but there were no hiring charges, right? That means the only
No.
relevant cost of material is of machine is how much in this one?
7,000.
That means relevant cost. Oh, let me use. I hope you get it. That means
Yes, sir.
cost of machine is what? The fall in restate value, also.
Yeah.
Fall in restate value, which was what?
7,000.
With
8,000 and
7,000.
1,000.
The 1,000 in
8,000 minus 1,000.
just 7,000. Okay, so now we have our total. Wait, what if we have two customers? We have to look at the customers. Two customers who have offered a price. So customer A offered a price of 54,000 cedis, and customer B offered a price of 60,000 for this contract, right? No, let's make one 30,000 and the other one 60,000. So let's see if which one should we accept. So we have to put all the relevant costs together, right? So we have material costs being 6,150, labor 24,375, 14,500, and 7,000, right? So let's get the minimum price. So minimum price of the contract to be what? So relevant cost of material. Material was what? 6,150, not so.
Yeah, 6,150.
Labor 24,375.
24,375.
Overheads
14 something.
14,500. Then machine
7,000.
7,000. Okay, so let's see. So what's the minimum price?
52025.
52025.
025.
Okay. So let's consider customer A. What's the offer price? Wants to give 30,000. Accept or reject?
Reject.
We should reject, right? Why? Why should we?
Yes. It's lower. So the minimum is lower than the minimum price.
The offer is lower than the minimum price.
Yeah.
Minimum price is 52,025. But he's offering 30,000. So we should reject it, right?
Yeah.
What about customer B?
So we should accept.
60,000, right? So we should
Yes.
accept. Why should we accept? Because it will
Because
be
the offer price is higher than the minimum price.
Plus.
an extra contribution or an extra result in an extra benefit. What's the extra benefit?
Outright rejection.
That's the 60,000
7975.
7975.
7,075.
7975.
7,975.
975.
If we accept this order, right? So we will accept customer B over customer A. But what other qualitative issues should we consider? Assuming we reject this customer, are there not some repercussions? What's the long-term business relationship that will be served? Have we been working with this guy for a very long time? Would it affect our goodwill with this customer? Have you thought about it? Do you see how I come up with these points? I hope by now you're starting to
Yeah.
get how we approach this. What other thing can we talk about? Assuming we accept this guy and reject that guy, what other thing can be affected?
Um,
What other thing can be affected?
so reliability of the B, if only they will be reliable, the customer B,
Okay. What if
if they can be reliable.
he changes his mind and doesn't pay? That means we've lost.
Uh-huh.
That's
Uh-huh.
nice. Okay, so let's see this one, then we can say good night. Now, you are the management accountant of Tricks. This one is for you. So you guys are now going to answer this based on what you have learned. I've done my part.
Okay.
Now let's see.
Okay.
You are the management accountant of Tricks, an organization which has been asked to quote for the production of a pamphlet for an event. The work could be carried out in addition to the normal work of the company. That means the company has its normal work, but this is in addition, meaning incremental, right? Due to the existing commitment